skirmish? Well, it's either a war or, to hear Jamie Dimon tell it, maybe just a skirmish when he talks about the battle back and forth with the Chinese, at least. So that's the big one. That's the one where all the marbles are apparently on the table. Market Watch's Ryan Payne and John Camney. I don't know whether he is trying to get back in the good graces of the White House, John, but what he's saying is, don't worry, this is no big deal, maybe anticipating that there'll be some deal. What do you think?
Well, let's hope there's a deal, or let's hope there's an end to any of the trade talk hostility. It can't be stressed enough that the only closed economy is the world economy. And when you look at that in terms of China, this is a huge market for U.S. producers. I say it all the time that most valuable U.S. companies, Apple, gets a quarter of its revenues from China. It's the second largest market for McDonald's, second largest market for Nike. Starbucks has 3,400 stores there, on the way to 7,000. To go to war, to basically put up barriers to China imports here, is to limit U.S. sales over there.
The market seems to be saying, and I'm learning on that just today and lately, and maybe throughout this whole trade friction, at least, Ryan, that it's not going to happen. Cooler heads will prevail, and a lot of these trade-sensitive companies like Boeing and Caterpillar are breaking out. What do you think?
Yeah, no, I think absolutely the market's telling the real story. And the bottom line is, I think the one thing that's been discounted is this hurts China so much more than the U.S. At the end of the day, China imports to us 4 times what we export to them. We have the upper hand here. That's definitely what the markets are telling you right now, Neil. You know, this is definitely where the U.S. has the upper hand. The market's kind of getting past it now. You're starting to see the dollar weaken a little bit. So I'd arguably even say that for China right now, 2 investors have gotten past it because China has kind of bottomed in the short term here as well.
So let me flip it around, guys, if you don't mind. And John, the other argument is, you know, this takes a while to resolve, that the Chinese who might offer a concession might not offer it until well into the new year. And ahead of that, we could be looking at higher prices for lots of stuff going into the holiday season. And that will tick off a lot of consumers. What do you think?
Well, to your earlier point, at least for now, markets think this should be a pretty easy transition to whatever comes ahead. But I want to stress again that what hurts China hurts the United States. Let's not forget that U.S. shares are priced based on the idea that the Chinese economy is going to grow. And with that, demand within China for U.S. goods that are very aspirational there will skyrocket. And so when people get excited here and say, oh, yeah, China's really hurting in this, Trump's winning. No. You don't win by knocking down what is the biggest or second biggest market for your best companies in the United States.
You know, a lot of people wonder about that, too, Ryan, that whatever victories are achieved, could China in a sneaky way still stick it to our big businesses, you know, make it very difficult for them to expand, make it very difficult for them to enter certain markets, but a way that isn't patently obvious, but you know is going on?
Well, no, I think this trade skirmish, we'll call it, as Jamie Dimon did, is more of a short-term issue. In the short term, you have to look at where China is. Their economy is slowing. Their exports actually decreased from July to August. And if we were to add that 25% tariff at the end of the year on those $200 billion in goods, that could actually strip away like 0.5% of GDP for China next year. So I really think we kind of have them in a corner right now. I think longer term, cooler heads will prevail. But in the meantime, I really think this is, where the U.S. has the upper hand. And I don't think you have to look past that. And I think we're going to get some sort of concession just because those immediate economics are so critical.
John, regardless of what happens on trade, is it your sense that this is a fairly valued market or getting ahead of itself?
I think markets are generally always right. They're pricing in what the future looks like. And I think right now they're saying that what's going on in terms of the trade skirmish isn't going to be that big of a deal. What I always like to point out is consider the unseen. What if we weren't having the discussion at all? How much more advanced that stocks would be? But I'll just stress, the best deal is the one that exposes U.S. companies to the most global competition and that frees the American people to purchase as much as they want from around the world. That's the best deal. We'll win by reducing barriers to foreign goods.
Gentlemen, thank you both very much.